Welcome to this CFO Meet session. This is a virtual 1-hour session. We're going to dive into the challenges and opportunities facing today's CFOs. But just to note, we'll also have a chance to elaborate more on these topics that we discuss at our in-person event, which is August 7th in Manhattan at Fogo de Chao. So as you probably know, nothing drags the finance leader into the spotlight like economic uncertainty, right? And this is indeed a very timely session. Now, let me introduce myself real quick. I'm based in Atlanta, Georgia. My name is Jenna Banks, and I will be your moderator today. A little bit about me. I'm a speaker. I'm a best-selling author on a book that's all about the importance of self-love and how to actually practice it in our daily lives. I also host and facilitate and moderate both live and virtual events, just like this one. So just some quick housekeeping. We would like this to be as free-flowing a conversation as possible, as useful to yourselves, the audience, and also our fellow CFOs as possible. So if you'd like to ask a question, feel free to raise a virtual hand or just put it in the chat box. We'll definitely be monitoring that. So feel free to ask any questions as we're going along because we probably won't have Q&A at the end. But please also be sure to just make sure that they're relevant to the discussion. Now, as CFOs, you're going to be tasked with delivering growth efficiency at a time of macroeconomic, political, and geopolitical uncertainty. You'll also be facing those challenges of managing data analytics, regulation, hiring, and talent, and working out if and how to safely deploy automation and new technologies, like the much hyped AI and generative AI, which I'm hearing just about every other day, as I'm sure you are. So we are here to talk about those challenges faced by CFOs and the skills that are needed to navigate all of these changing scenarios going forward. Again, please don't forget to mark your calendars for August 7th in Manhattan at Fogo de Chao. But for now and for the next hour, we have an absolutely fantastic lineup of CFOs for you. But before we bring our panelists on stage, I would like to ask if Chris Scalera of Tungsten Automation, if he would come up onto the virtual stage and say a few words.
Sure, thanks. Yeah, my name is Chris Scalera, and I'm with Tungsten Automation. We're one of the sponsors, and we're a leader in the financial process automation space. We have a proven history of bringing in real AI-driven solutions. So it's not just hype, they are real. And at a time when data-driven decision-making is paramount for you guys, our AI-powered platform automates, some of the complex, time-consuming, and manual processes. So we'll give you some real-time insights and predictive analytics to empower your teams to make informed decisions more swiftly. Along with us, we have our partner Genus, who is one of our implementation and consulting partners. So they kind of help make all this stuff go when it's on the ground. So we wanted to welcome you all here. I hope you have a great discussion, and we're here to listen and see how we can help you out.
Thank you so much, Chris. I really appreciate you. So I'll go ahead and start by asking our panelists to join us on stage. Let's start with Deepak. Now, Deepak Doegar, I'd like to, why don't I ask you to just introduce yourself, your company, tell us a little bit about your background, and then I'll ask you what you think the biggest challenges and opportunities for CFOs in the coming years. So just introduce yourself, tell us your background, and then what do you see as the challenges and opportunities for CFOs?
Thank you, Jenna and Harshil, for organizing this. It's really good to see CXO organization using the platform to disseminate information for the broader good. So really appreciate that, and thank you for inviting me. I am with Neurealm. Neurealm, we are a AI-based data-led company, more focused around IT services in healthcare, in tech, as well as new growth. So that's where we are. We're in a very exciting time. And over the years, I have spent most of my career with General Electric with 18 years. working in different parts of the globe. I started in India, and then I was in China, where I was running Asia Pacific for the business, and then of course, in US and Europe. So of different experiences, different businesses. So that's where I got some of my learnings, and will share those in today's session. Coming to your question about challenges being faced today, I would say the way you started it, Jenna, I think that says it all. Today, we are living, not today, it's been there for the last few years, but today for sure, we are living in a VUCA world. And for those who may not be familiar, VUCA, where V stands for volatile, U stands for uncertain, C for complex, and A for ambiguous. So there are so many things, you wake up in the morning and you see a particular policy out there. I'm not going into the right or wrong of it. And the next day you see a reversal of the policy, right? What that creates is a whole bunch of uncertainty. And when uncertainty is there, it becomes very difficult for business at large to predict and plan and action it. How do you source things? Where do you buy things? What do you do with your workforce? So many decisions, and they are paramount. I gave you an example of the policy or the regulatory aspect, but there's so many others. Example, in this world today, there are so many conflicts taking place. Those conflicts create a huge amount of uncertainty and ambiguity. And how do you deal with those? There are organizations which operate with some of these countries where operations are in conflict kind of situation. So I think that is perhaps the biggest challenge. But I would also say that is also the biggest opportunity. Since you mentioned it, because the skill and ability to withstand and operate in this VUCA world, not everybody has. And in my view, what it really requires is quick thinking, adaptability, and really being able to set up the organization in some sort of a fungible way. Not all companies, not all industries can have that, but as much as possible, permutations, combinations. Many of you in the panel today, with all these changes, I'm sure you've been going into a whole bunch of scenario building, right? And if we have the skills to be able to deal with this VUCA world, then it's not just a challenge, it is also an opportunity. So I think that's a big one today, Jenna. There are many more, like talent and the new genre of talent and how to bring them into it and how to adapt the organization to the talent that's coming into the workforce and remain vibrant. Yeah.
Wonderful share. Thank you so much, Deepak. I'm curious to know, how do you spell, is it VUCA, AWUCA? How do you spell that?
V for victory.
Yeah.
Or actually V for volatile, right? U for uncertain, C for complex, and A for ambiguous. So VUCA, volatile, uncertain, complex, ambiguous world. It's not a very new term. It's been there for some time, and we have been operating in a VUCA. COVID was also a VUCA time, right? So we have been, but the degree and intensity of the volatility, the degree and intensity of the uncertainty, of the ambiguity is increasing day by day. And how we continue to sort of operate there successfully, I think is going to be very, very important.
Excellent. Thank you so much for that. Thank you. So, Adelina, I would like to invite you to the virtual stage and introduce yourself. Tell us a bit about your background, your company that you're currently working at, as well as what you see as the challenges and opportunities facing CFOs right now.
Thank you, Jenna. Good morning, everyone. CXO community, I appreciate the opportunity. I've attended a couple of these events in the past and always found them very helpful. So when given the opportunity to share some of my thoughts and experience, I was very excited to do so. Harshil, thank you for sponsorship, and Deepak, very nice intro. Thank you for that. I learned something as well today. VUCA. I did not know what that stood for either. So point is, every day you learn something new. So thank you for giving me my first lesson of the day already before 1 o'clock my time. So I'm Adelina Pepenella. I am the Chief Financial Officer at GO Media. We are a digital publisher. G stood for Gizmodo, O stood for The Onion. Those are two sites that we have sold to other larger publishers. We are in the process of actually getting a little bit smaller. We used to have 12 sites. We are down to 2 right now. One is Kotaku. If there's any game fans out there, it's big on gaming. And the other one is called The Root, which is geared towards females. I've been in the media space for a very long time. Prior to Geo Media, I was at New York Magazine for about 18 years. And prior to that, public accounting, got my CPA. So I've been kind of CFO in small media companies for over 20 years. What does that mean? Always having to be flexible. Media has been a very interesting space over the last 30 years. I'll say that I've been in it, 25 to 30 years that I've been in it. There was no iPhone, just technology changes media tremendously. So needing to be nimble, think of new revenue opportunities, and just kind of be ready to change and adapt. Biggest challenge for me right now is, we're always wearing lots of hats in a small organization as CFO, constantly putting out fires, jumping from one thing to the next. I'm doing legal, I'm doing operations, I'm doing HR. Sometimes I'm even doing AP and AR stuff as well. I'm very much in the weeds and have my sleeves rolled up and have to get dirty if I have to. But really, I think it's just about, how technology has been changing accounting and finance in general over the last few years, but specifically AI, how things can be more automated, agentic AI, how we can basically have processes run from beginning to end and not have any human intervention there. Something that's, I'll be honest, a little scary to me. I already kind of gave you a sense of my age, but to date myself, like my first job out of college was in a public accounting company, and we were using ledger paper back then. So 13 column green and white bar paper. Probably no one else on this Zoom call or meet knows what I'm talking about, but we didn't really have laptops back then, and everything was manual with a calculator. So I've seen technology change things drastically in my many years of experience. So I'm a little, scared about it, but very excited about it because I can see how much it just streamlines things and allows everyone to just be more strategic and not do so much grunt work.
Thank you so much for sharing, Adelina. Really nice to meet you and have you both here on the stage today. So my next question is, how will the role of the CFO evolve? And Adelina, maybe you'd be best to answer this given what you just mentioned about where the CFO has come from, especially in your background in particular. So starting with the calculator and doing everything manually, and now looking forward, how do you see it evolving, the role right now?
I think it's a consistent evolution of just being more about, strategic and partner to the owners and the CEO. Generally the CFO reports to the CEO. It's less about being, the numbers person. I think, years ago, the CFO was chief, finance officer, and it was just about the numbers and just reporting, getting the audit done, making sure the tax returns were filed. But I think the role has really changed to be more of like a growth position, thinking outside of the box where there's opportunities for the business to monetize, find new revenue streams, and really push the business forward. Not just in terms of processes, but new business partners, new strategies, looking at new technologies that are out there, whether they're specifically related to the finance function or just your sales process alone. I think the CFO really owns almost every part of the business, because every part of the business in some way or another results in an impact to the bottom line, whether it's on the top line or whether it's on the OpEx side. So really just, continuing that overall purview of the company and being partner to the owners.
Yeah, makes a lot of sense. Thank you for sharing. Deepak, I'd love to get your insights on that. How do you think the role of the CFO will evolve?
The way I look at it, Jenna and Adelina, I think very good insights, and totally agree and endorse what you shared. And I just add to the same that, you can go and Jenna, you've published books, right? We can go back decades, 2, 3 decades, 4 decades, and every time you talk about a finance person, everybody's always, there's this perception that, the person is an accountant, right? And one has to traverse from the accounting role to the business CFO role, where you are giving insights to the business leaders, the CEO and your other peers that are there in the business, right? So the way I look at it is that continuum has been there. It is not a new thing. In fact, there are several companies, global companies in the world, where CFOs have been the succession to the CEO, including some very, very large companies. And the reason is that because finance, I look at finance as the language of business, right? And it is finance who can see how every part of the organization, the transactions are impacting, right? And when you have that kind of information at your hands, and if we just do a little bit more, stretch ourselves a little bit more, and connecting the dots and bring out insights, then we can be a key player in driving the strategy of the organization. Now, that is not an individual role. That is a team role of the entire C-suite, right? So working with the CEO, working with the sales leader, the operations leader, HR, legal, whatever, right? So how do we, and how do you build that comfort and confidence and trust level with your peer set, that when we are giving those insights, they are seen as collaborative insights, and really build that into driving where the organization is going to go, not just from a strategy perspective, but actually executing, because you want to drive an outcome. How do you bring it all together? So I really look at it as the evolution as a true business partner, I would say. So and to the point that Adelina was mentioning, more and more of the tax part, the compliance part, the regulatory part, the accounting part, more and more of that is getting codified. More of that is getting automated. More and more, and as we will see technology evolve with AI, etc., even more of that will. And with AI, some of the business strategy part may also, start bringing those influences, where one is able to start when the machine models are starting to, think like humans, and bring some of those insights together. So if I were to go back 40 years ago or 50 years ago, all the accounting ledgers, a lot of them, they were on paper, or 60 years ago or 70, right? So everything had to be manually done. And then there was evolution of technology. So I think more and more as technology advances take place, to the point Adelina was mentioning, more and more of that is going to get codified. And we as finance leaders, we as CFOs have to come in and be co-business leaders.
Powerful. Thank you for that. I'd also like to remind our audience that if you have any questions, please feel free to put it in the chat. I will be monitoring that. So I'd like to switch gears and ask, what are your top priorities for 2025? And I know half the year is almost already over. You may already be thinking about 2026. And if so, I'd love to hear what your priorities are for next year if you have that thought out already. But yeah, who would like to take this?
Happy to take that.
Thank you.
So, as I mentioned, the VUCA world, it is my priority number one, and priority number two, and priority number three is to navigate through this VUCA world because it is throwing surprises every day, right? And how do we? And it's not just about navigating, but coming out on the other side in much better shape and form as opposed to just surviving it, right? So priority number one, two, and three are that. And the other one, I mean, there is all the transactional stuff. We got to meet our numbers. We got to, get our audit done. We got to tax filing, blah, blah. All of that is there, I mean, that is like table stakes, right? But the other one that I'd sort of, really, it's puzzling me. I'll put it that is solving for AI. And why I'm saying solving for AI, I'm still learning or trying to understand how I can leverage AI. And AI has been misunderstood. Like these days, everything is AI. So even if there is, minuscule use of AI, then suddenly, we start calling it AI, right? And being part of an AI-led company where, that is our specialty. And even though AI in the media has been there in the last 2 years, our first AI-based platform was, started 2018 or 19, something like that, right? So several years ago. So bringing that part into finance in the real sense, and being able to leverage that not just with my internal organization information, but marrying that with external information to be able to then give those insights is something that we have just initiated the journey. I want to say maybe like last month. And so we are in that thinking mode of what we need to be doing, how we need to be doing it, what is workable. Do we have the AI is going to be based on data. So first you need to have good quality data, a data that's able to speak to each other, etc. Right? So we, in that whole, we're in that discovery phase, sort of trying to think about it.
Awesome. Thank you so much, Deepak, for sharing. Adelina, would you like to add to that or share what are some of your top priorities for this year or next year?
My company's in a little peculiar situation, so it's, difficult for me to speak specifically in regards to like company goals, but I would just say personal goal, as always, is just, continuing to keep my eyes and ears open and learn, also lean on communities such as CXO. I belong to a few other CFO communities as well, and always find, connecting with peers to be extremely helpful and valuable. Everyone, is experiencing something different at the particular time or at the particular moment, but inevitably a peer has gone through whatever struggle or challenge you're going through with at another time. So continuing to lean on, communities such as this one to continue to learn and grow is really just a priority for me. It's a priority for me every year, but I think as, technology evolves and my specific business is evolving in a different way, it's helpful for me this year to just specifically focus on continuing to learn and, learn on my own. I do my own learning, my own reading, but as well as learning from peers who've been through similar situations.
I'm so glad you brought that up. This was just on my mind yesterday. I was at an event, which was also just a powerful networking event, and getting support from community and learning from others and growing together. Also very important that we invest that time into ourselves. So thank you so much for that. So I'd like to switch gears and ask, how are AI related tools impacting CFO budget decisions or tech stack planning? Who would like to take this one? Feel free to speak up.
Okay, I can go.
Okay, thank you, Deepak.
Can you ask the question again, please? Sorry.
Sure. So the question is, how are AI-related tools impacting CFO's budget decision or tech stack planning?
So given that we are an AI-led company, so definitely it is front and center. And AI is also evolving, right? As I mentioned, the AI that was there 5 years ago, 3 years ago, 2 years ago, 1 year ago, even 3 months ago is different, right? So there is an investment definitely required in terms of, number one, staying on top of it, right? Then our teams, our talent, investing into them, and they being able to understand, learn, and execute on AI. And if I were to shift gears outside of the business, because many of the people in the session may be CFOs in their own organizations. So if I bring it to my organization, investment into AI for our own self, everybody has a lot of asks because everybody wants to implement AI. It's the fancy thing in town. As a CFO, excuse me, whenever I ask the question, okay, what am I going to get after making that investment? That is where it becomes fuzzy. And it's not very clear what are the returns on the investment of AI as opposed to, the spend. Spend is because there are a lot of how to put it, lot of consultants, lot of information out there where, okay, we're going to do this, we're going to do that. Like, even in some of my accounting process, when I talk to some of our vendors and partners who want to do something in AI, when I ask the next level detailed question, it's really not AI, it's basically automation. And there's a very small usage of AI. So that's where I think it's about, yes, it's the right thing to do. And at some point, if people don't engage on that, I think it's going to hurt. Question is, in terms of prioritization, what are we prioritizing? Prioritizing, what are the returns out of it?
Yeah, I really like how you mentioned it's really not about AI, it's about automation. That's interesting to point that out. Yeah, thank you for that. All right, I'm going to ask Adelina a different question, which is, and if you don't feel like you want to answer this, and if Deepak, you feel like you might want to answer it, please feel free to speak up. But the question is, which metrics should CFOs watch most closely right now to evaluate your software ROI? And maybe Deepak, you might want to take it since we were just talking about that. But Adelina, do you have something to add to that?
I'll let Deepak take this one.
Okay.
So you mentioned how to evaluate software. What was that?
Yep. So which metrics do you think CFOs should watch most closely right now to evaluate that software ROI? So you were just talking about, evaluating the
Okay,
ROI.
got it.
Yeah.
Got it.
Yep.
Yeah. See, I'll take it a little bit beyond metrics, beyond financial metrics. Okay. The reason is, in today's ecosystem, there's so many other factors which are more important. To start with, I think one of the most critical aspects is cybersecurity. If I get a software, it needs to have the highest standards of cybersecurity, because if there's an attack and it's not able to withstand it, my very, very highly sensitive data can be out there, and I'm also regulated, right? So then regulatory challenges are there. So I want to say, I think the biggest piece with regards to that is cybersecurity. Second thing, beyond cybersecurity, I would say regulatory compliance. In today's ecosystem, there are a lot of regulatory changes which are taking place, and one has to think, we are a global company, so we have to think about it as a global company. So there are many softwares which are catering to one particular market, right? It could be US, it could be UK, it could be Europe, it could be Asia, China. But how does one deal with, either I have multiple softwares for different things, for different, right? Otherwise, the regulatory compliances become a huge challenge. And not only do they lead to inefficiency, so the easy answer is, okay, I've invested X million. I mean, a software it cost me X million dollars, and how much I'm going to save out of it, either on hardware costs, IT costs, or other things, right? But if we have a software solution which does not cater to all my regulatory requirements, then I have to create inefficiency and cost in any case to be able to separately meet those regulatory requirements. So I think one has to have that holistic view, I would say, beyond just the financial metrics. Is it really solving for my need holistically?
Great point. Yes. Thank you for answering that, Deepak. So I'm going to switch gears and ask you, Adelina, what should the CFO's top priorities be for improving your procurement process? Any insights that you'd like to share there?
I think just having adequate controls and checks and balances has always been key for CFOs. I don't recall where I read it, but perhaps it was in one of my CFO groups WhatsApp channels yesterday, but people were talking about AI and automation in regards to procurement, and there's been a significant amount of fraud. So, nothing is foolproof. There still needs to be a way to ensure that money is going out of the business properly and authorized. So this whole concept of seamless and automation and no manual intervention, no oversight is not necessarily foolproof, at least not now. Perhaps we need some more time to work out the bugs and do some more testing. But I think 50 individuals in this community of maybe 350 or so raised their hand and said that there was fraud within the AP/procurement process where they had implemented more automated systems. So focusing there, I think, is key. Obviously, the whole part of automation is, how do we do more with less, streamline, and take some of those resources and focus them on things that are more strategic and can help drive the bottom line. But inevitably, for now, if it's not working completely smoothly, it's creating additional issues. You then have to put out fires, figure out, where the breakdown in process was, figure out if you can recoup funds. I'm not saying it's creating more work, but it's creating other issues for companies and CFOs to deal with. So, I always say you have to keep your eyes and ears open. Here's another example. You still have to pay attention and be looking at things. I'm not saying you have to look at every transaction, but sample testing and spot checking, going back to my old audit days, potentially can help find some of this fraud before it gets too big.
Awesome. Thank you so much for that. And I also just want to remind the audience that we're going to continue these conversations at our in-person CFO meet in New York, in Manhattan on August 7th. So don't forget to sign up for that and join us. And I just noticed that our other panelist, Adam, was able to join us. Adam, I'd love to invite you to our virtual stage, if you don't mind, and just introduce yourself. Tell us about your company that you're working at now, and then a little bit about your background.
Sure. Thank you very much. My name is Adam Barsky. I'm the CFO for the New York Power Authority. We are a public authority. We're the largest state-owned public utility in the country, based in New York, serving New York. We count for over 25% of all electricity generated in New York, and we own 40% of the transmission grid, and we serve both economic development customers and large governmental customers as well. And we're in the middle of, obviously helping to lead the energy transition towards less fossil fuel, more renewables, and other forms of clean energy, something that we're very much focused on. My background has been both in government and private. It's CPA by training. Spent time in New York City as the New York City budget director and chairman of the city's pension funds for a number of years. worked at the governor's level as a deputy to the governor for New York State, overseeing all the public authorities, the banking commission, insurance group, as well as other regulatory agencies. And then I was in a bank, a regional bank, as a chief risk officer for 11 years as well. So had a couple of different careers, and then came back here, and I got involved in the energy sector because I believe it's a great place to be right now with all the changes that are happening.
Well, we are so glad you could join us. Thank you so much for being here. I would like to start off by asking you, Adam, if you could share how your organization is integrating travel and expense data into its financial reporting systems.
Sure. Right now we use Concur for a lot of our travel and expense data. We have employee credit cards, that we utilize. So it has to be really managed very carefully because, and we do a lot of travel. So people travel throughout the state. So we do have a very active requirement that people need to be traveling a lot. So, having people use their own cards and getting reimbursed is really not practical. But when you start having people using your own credit cards, your company credit cards, there needs to be a higher level of scrutiny and controls around it. So it requires a lot more work, but it seems to be working out very well. And again, it gets back into this whole issue about having the right types of controls and having reasonable budgets and having the right justifications for certain types of travel. If you're going out of state, out of country, or to conferences and seminars, there are some controls you need to put around that so that it's managed properly and there's right justification, and you try to avoid opportunities for abuse.
Yeah, it makes a lot of sense. Thank you for sharing, Adam. Would anyone else like to add to that, Deepak or Adelina? So the question is, how is your organization integrating travel and expense data into its financial reporting systems?
Yeah. No, I think I completely agree with Adam, and and we also use Concur. But the challenge again is, as a global company, I'm using Concur for my people in the US, some in Europe, but in other parts I'm not, right? Because it's not fully integrated. We have been exploring them. So those are the kind of challenges. And the good part is, if you are on a platform like Concur, then it is quite seamless. To a large extent, it is quite seamless, right? But the global part is sometimes a little bit more complicated, and we are right now evaluating if there is one global platform for travel that we can explore. So that's the journey we are on. But I totally agree with Adam.
Thank you for that. I would like to switch gears real quick and Adelina, ask if you can share, how can finance departments streamline financial workflows while ensuring data accuracy and also consistency across all departments?
I think, the first thing is just to look at what processes need to happen. And I always like to kind of document and do like a work chart first, sit the team down and everyone that has a job in that workflow to kind of explain what they do and why they're doing what they do. I'm a big fan of like everyone collaborating. I'm not much of a like top down where I say, here's how it's going to be. I like to hear everyone's opinion in terms of, what they're doing to get their job done and what piece they play in the cog of the wheel. And then, just together as a team, come up with how we can do things better, faster, more efficiently. I think sometimes, when you're a piece of a cog, you're very focused and like you have blinders on, you're like, okay, my job is to do it this way and just this. But when you hear other people's perspectives, the next person and the next person that comes after you, it makes you think differently about like, okay, I don't have to do it this way. There is another way to get to this end result. And, if the final approver is looking at X, Y, and Z and wants the data this way, maybe there's a different way I can do my job to make things more streamlined. And as far as data accuracy, it's really just about looking at it and sampling it, using your gut also a little bit, and having a sense of the business, kind of knowing what's out of normal. Inevitably every company's going to have, unfamiliar spend or something that's out of line, given, if there's a legal matter, yeah, your legal expenses need to go up, but that could be a red flag, but you drill into the details and then you can explain it. So a good understanding of the business and just, speaking to your teammates and understanding the entire process, I think is helpful.
Love that. Thank you so much. I'd actually like to invite Ryan Milligan to the screen and ask you to ask question number 9 for us, if you don't mind.
Awesome. Thanks so much, Jenna. Hi, everyone. I'm Ryan Milligan. I lead the go-to-market teams at QuotaPath. QuotaPath is a sales compensation automation software, but specifically, we help CFOs use your compensation plan to drive sellers to deliver revenue that's better for your business, whether that's longer-term contracts, multi-product, and kind of tie compensation and sales comp to actually driving profitable, efficient growth. So my question is to members of the group and whoever can jump in to start, how are you using your sales compensation plan today to drive your go-to-market teams to deliver better revenue for your business?
I'll chime in, I guess. So when I got here at Geo about 5 years ago, we had a very simple comp plan. Basically, hit this number, it's tiered structure. You start getting paid at 60% and you follow the chart and that's it. Which makes things very simple when the business is small. But if you're looking to incentivize certain behaviors or grow certain lines of business or reach new categories or increase deal size, for example, it really does not incentivize that. So we added more layers to the commission plans that were not, related, so that a seller could kind of, even if they had a difficult year, they could still make money if they did other things that still drove, the bottom line for the business overall. May not, have hit their specific revenue goal, but things like, increasing average deal size, retention, breaking new categories, breaking a new client. We put other incentives in to the standard commission plans, as well as kind of doing kind of spot bonuses. We made it fun for the team, where we would get like a dartboard and have various prizes. And, it just helped with employee engagement and morale a little bit, for all the sales team to kind of get together. And we made it fun. We had, snacks and some drinks and stuff. And, everyone was playing a little game and they had their goal. And then we did, a little incentive of a gift card. And, just sometimes little things like that get people motivated and increases camaraderie, and, better camaraderie on the sales team, eventually leads to better sales overall.
Thank you for that, Adelina. Deepak or Adam, would you like to add to this?
No, I broadly agree with Adelina that that's what it is. But it's also, if we were to sort of split our organization a little bit, it's also services. We have a services element. We have a product element. And sometimes those nuances require some sort of fine tuning a little bit.
Yeah, makes a lot of sense. Adam, do you have any insights to share there as well?
I just think that one of the things we concentrate on is just education around people internally about how to work with various customers to, I would say, get a bigger share of wallet where possible, and understand where the opportunities are and how to leverage those relationships. And sometimes it's just not, people don't know what all the opportunities are to be able to, not only present to allow us to grow what we're selling, but also providing a lot of benefits to the customers that they may not be aware that we can do or provide. because they don't have the full spectrum of all the different services.
Yeah, it makes a lot of sense. So I'd like to ask, I'm actually going to switch gears again and go to Deepak and ask you specifically, how do you strike a balance between giving your team autonomy and maintaining alignment with the organization's goals?
It's a great question. I'm just wondering why there should be a challenge at all. Why would autonomy be in conflict with organizational goals? It could be, but it would also suggest that we are not listening to our employees' suggestions, right? I would say that, in my team at least, I'm open to suggestions. I do not feel that I have all the answers. I do not feel that our leadership team has all the answers. I think we are a leadership team which is in a learning mode. We do have a strategy. We do have an execution plan, right? But when there is a suggestion which comes up that, look, maybe there is a better way to do it, or this is not working. I mean, that is autonomy, right? And then you're listening and you pivot. I really don't see any challenge at all. In fact, what I've seen my leadership team and me and my team also, I encourage my team to give different points of view, as opposed to, if we're all agreeing, then it seems to suggest that if there are like 5 people in the room, only one person's brain is being used versus the power of 5 people and engaging them and the power of what can be created out of them. So I think that's where I am. And many times everybody's not fully engaged. That's a different discussion. But I really see both of them together. The evolution of the organization, the goals of the organization. There are some which are top down, but we're always on a listening mode and fine tune and adapt and find our path based on inputs we receive.
Powerful. Yeah, thank you. Adelina, I would like to ask you the next question, which is, what strategies have you employed to build a culture of trust?
Amongst the team or amongst my managers?
I would love to hear about both, actually, if you wouldn't mind
Okay.
sharing.
I mean, I have always been a very hard worker, passionate, and dedicated to my job and wanting to excel and learn more. And I think that just speaks for itself. So like I said earlier, my first job was CPA firm, was a small one, not one of the big ones. But I started with like a group of 8 other college graduates, and on a summer Friday back then, when everyone was like rushing to leave early, like I didn't mind staying a little later, sitting down with the manager and learn and just kind of take advantage of the time. So that kind of shows to your mentors and your supervisors that, you're in it for the long haul. You want to be part of the business and you want to provide value, and that builds trust in people. Being able to have difficult conversations as well, I think is important. There are some people that cannot handle them and will shy away from having difficult conversations with someone on their team. But if you're able to do it in a professional and compassionate manner, the other party, generally will be appreciative for that conversation. So, I think a lot of it has to do with your character, just also how you treat people, like in day to day, when you're passing each other in the hall, when you're passing each other in the kitchen, just being respectful helps build trust as well.
Excellent. Yeah. Wonderful answer. Thank you. Adam, I'd like to ask you this next question. We only have a few minutes left in our time together. So As CFOs increasingly act as strategic partners across the enterprise, I'd like to know, how are you collaborating with the other executives to drive business growth and innovation?
That's a great question. And I think that, and it goes to all those different things you said about creating that autonomy, but shared goals, and it's about the trust. I mean, those things need to be there as sort of foundations to being able to do that. One of the things that we've adopted, and there's a lot of studies around this, is this concept of first team. And we all belong to different teams. So I have a group, and I'm part of, and the people that work for me, right? They could look at that and my senior leadership, that's a team. But one of the things they realize is that I also belong to that executive level team. And what's surprising to a lot of people is that the people who work for you want to know that you are prioritizing that first team, and that that team works well and effectively together, because that's very important, because that cascades down to the rest of the organization. People, throughout the organization that work for these different leaders, that all, leads up to people on this other level. If there's a sense that there's not a cohesive group, that they don't know how to escalate issues, discuss issues, resolve those quickly and in a mature and rational way, it could lead to a lot of dysfunction in organizations and create lots of silos. And you're always trying to break those down, right? So you want to be able to make sure that you're cutting across. But this first team concept is something that we've really embraced, and spend a lot of time working with that group of your peers, being that's your first priority, and that you're bringing back to your group all the things that they need to do to make me a successful contributing member of that first team. And I think that's the real important message that has to be put out there.
Very important, I would think. I just got chills, so that usually is a good indicator to me. Thank you so much for that, Adam. And thank you to all our panelists. But before we wrap this up, as I mentioned before, I wrote a best-selling book. Adam, you weren't here in the beginning, but it's all about self-love. And let me guess, when you all hear the phrase self-love, you may picture bubble baths, maybe a lavender-scented candle, a glass of wine in the tub, a quiet moment away from your inbox. That's all nice, but that's not self-love. That is actually self-care. And while I'll never say no to either, I'm here today to tell you that those things are not what helped me land a job that I wasn't technically qualified for. And they're definitely not what helped me build and sell one of my businesses for a 1000x return. That all came from something so much deeper. It was a decision to stop abandoning myself and love myself more. So today I want to talk to you very briefly before we close about something that often gets dismissed, misunderstood, or minimized, especially when it comes to high-performing environments, and that is self-love. It's one of the most underutilized superpowers in business and in life. And it may just be the key, at least I believe, to navigating the future, not just with resilience, but with relevance, clarity, and the kind of courage that changes everything. Now, briefly, I've been an entrepreneur for the majority of my career, nearly 2 decades of starting businesses and growing them from the ground up. Most of my business education didn't come from a traditional classroom. It actually came from direct experience, from building things, from failing, but also succeeding, and from figuring things out as I went. But there came a time in my career when I wanted something different. I really missed the energy of being part of a bigger team, the challenge that comes from growing something that already exists, and also the opportunity to make a massive impact within a company that had a lot more resources than I had as an entrepreneur. So I decided to go back into the corporate world. Now, I was looking for jobs, and I found a listing for a director of business development role at a consumer products company. Now, when I saw the job description, it felt right. It felt entrepreneurial, challenging, but in a good way. And it offered me the opportunity to potentially make a lot of money since a big part of that compensation package was tied to growth. So I read that job description and I instantly knew that I could thrive in that role. But there was a problem. I didn't meet all the listed qualifications. So here's the part that I want to get really real with you, because this is the part of the story that most of us know intimately. Even with all my experience, even with what I knew I was capable of, even after building and scaling businesses from the ground up, I hesitated. Why? Because I had been conditioned, like so many of us, to doubt myself, to play small, to be grateful for whatever opportunity may come my way, to seek safety over risk, to wait until I checked every single box before putting myself out there, right? So there was this voice in my head that said, what if you're not good enough? What if they say no? What if they see you as a fraud? But I also had another voice in my head that said, well, you are good enough. What if you are good enough? Oh, and I also had the voice of self-trust, self-worth, and self-love. That voice said, you have always been able to accomplish everything you've set out to do, Jenna. I don't know exactly how I get there, but I have the faith in my ability to figure it out. So I applied and I got the job. Now, this is what self-love looks like in the real world. It is self-love in action. Now, there's a lot of talk about self-care these days, and self-care is really important. But self-care is not the same thing as self-love. So I just want to break this down for you real quick. I find it really helpful to think of self-care as external, like external to your body, and self-love as internal. Self-care is the action, and self-love is the belief that you deserve it. Self-care is taking a nap when you're tired. Self-love is knowing that you are not lazy for needing to rest and that it's important to prioritize your needs. Self-care is getting a massage after a really tough week. Self-love is setting a boundary so you don't end up burnt out in the first place, right? Self-care is eating healthy or having a fitness routine to take care of your body. Self-love is valuing yourself enough not to let somebody else devalue you or treat you badly. You can have all the self-care routines in the world, but if you don't love yourself, if you don't trust yourself, advocate for yourself, forgive yourself, or treat yourself with love and compassion, then those routines are just surface level. And that applies just as much in leadership as it does in life, because the way you treat yourself, that is the blueprint for how you lead others. So I'm going to end on this note, but we'll be continuing this conversation about self-love and self-care at our in-person CFO Meet New York on August 7th. So we're going to go ahead and stop it here, but I want to thank all of our panelists and sponsors as well. Thank you so much for being here, everybody. Deepak, Adelina, and Adam, we really appreciate you. And we'll see you at Fogo de Chao in Manhattan on August 7th.